I brought together Canada's 3 biggest dividend ETFs to see which one will make you the most money. We have VDY, XEI, and ZDV in the ultimate showdown for 2026. These 3 are passive income machines, promising huge monthly dividends from the Canadian market. But I promise you, they are not all the same. If you pick the wrong one, you could be leaving literally thousands and thousands of dollars on the table. It's a crazy decision to make. So today, we end the confusion. We are putting these dividend heavyweights in a head-to-head challenge, breaking down everything to declare the definitive winner. By the end of this video, you will know exactly which one to buy. Section 1. The contenders. Let's meet our 3 challengers. First up, the biggest of them all, Vanguard's VDY. This thing is a monster, with over $5.5 billion in it. It's the one everyone knows, and it just buys a ton of Canadian stocks with huge dividend yields. Next, we have the challenger from BlackRock, iShares XEI. This is another giant, designed to be the only dividend fund you ever need, giving you monthly cash from a basket of 75 different stocks. And last, we have BMO's ZDV. This one is wild. It doesn't just copy an index, it plays by its own rules, trying to find the absolute best dividend stocks it can, focusing on safety and growth. 3 funds, 1 goal, make you money. Let's see who does it best. Section 2. The price of admission, management expense ratio, MER. Round 1 is simple. Fees. This is how much money the fund manager takes from you every single year, and it adds up like crazy. And right away, we have a clear winner. VDY and XEI are basically giving their ETFs away for just 0.22%. For every $10,000 you invest, you only pay $22 a year. That is insanely cheap. But then ZDV comes in charging 0.39%, that's $39 a year for the same $10,000. It might not sound like much, but that is almost double what the other 2 charge. BMO says it's because their strategy is better, but we're gonna test that. For this round, VDY and XEI absolutely destroy the competition. They give you more of your own money, it's that simple. The main event, dividend yield. This is the round you've been waiting for, the dividend yield. This is the cash you get paid just for owning the ETF. For passive income, this number is everything, and this is where it gets insane. XEI almost always has the biggest yield, recently sitting at a massive 5%. If you invested $100,000, that's $5,000 of pure passive income paid to you every single month. That is crazy cash flow. Next is VDY. It's still amazing, with a yield of around 4.3%. It's a ton of income. But bandam diob buds, the dando santoric here, and dandin sandalidits. It's not as much as XEI if you just want the most cash possible. And finally, ZDV. Even though it talks about dividends, its yield is way lower, recently around 3.07%. So if you want the most cash in your pocket right now, XEI is the undisputed champion of this round. It pays out the most. Section 4. Under the hood, holdings and sector concentration. An ETF is just the stocks it owns, so we are literally tearing these open to see what's inside. And what we found is crazy. They all have one giant hidden risk. Let's start with VDY. This ETF is the most concentrated. It holds 57 stocks, and an unbelievable 56.8% of the entire fund is in banks. Add another 25.9% in energy, and you have 83% of your money in just 2 things. Your money is basically all in Royal Bank and TD Bank. That is a wild risk to take. Now for XEI, it's a little smarter and spreads your money out more. It owns more stocks between 76 and 79. It still loves banks and energy, but it has rules that stop it from putting everything in one place. No single stock can be more than 5% of the fund. Finally, ZDV holds about 63 stocks, but it still has a giant 39 to 41% of its money in the financial sector. This is the biggest risk for all 3. If banks or energy have a bad year, these funds get crushed. For this round, XEI wins. It's more spread out, and that makes it the safer bet of the 3. The ultimate test, total return performance. Dividends are awesome, but what makes you rich is total return. That's the stock price going up plus the dividends. This is the final boss battle. Looking at the history books, one ETF has consistently crushed the others. VDY. One analysis from late 2025 showed VDY with a mind-blowing 18.23% 5-year return. XEI only got 15.93%, and ZDV got 15.26%. VDY's huge bet on Canadian banks paid off big time, leading to insane growth. Obviously, what happened in the past isn't guaranteed to happen again, but you can't argue with those numbers. If you put your money in VDY 10 years ago, you would have so much more money today than if you chose XEI or ZDV. I have to warn you though, even though VDY is a winner here, all of these dividend ETFs have often made less money than just buying the entire Canadian stock market. You're trading a chance at bigger growth for more dividends today. But in this challenge, VDY is the undisputed champion of total return. Section 6. The 2026 verdict declaring the winners. After 5 insane rounds, who is the winner for 2026? The truth is, the best one depends on you. So I'm not picking one winner, I'm picking 3 winners for 3 different people. The winner for retirees who want cash is XEI. If your only goal is getting the most passive income possible to live on, XEI is your champion. It has the biggest dividend, period. Plus its fee is super low at 0.22% and it's safer than VDY. It's a perfect choice to fund your life. The winner for long-term growth is VDY. If you're trying to build as much wealth as possible over the next 10 years, VDY is the king. Its total return is undefeated. That incredible growth plus its tiny 0.2% fee means your money will compound like crazy. Reinvesting those dividends will build you a giant portfolio over time. The winner for the safest all-around choice is also XEI. This might shock you, but if you're scared of VDY's insane bet on banks, XEI is the perfect middle ground. You get a monster dividend yield, but your risk is spread out way more because of its safety rules. You might get a little less growth than VDY, but you'll sleep better at night. And ZDV? Its higher fee and worse performance make it impossible to recommend over these 2 titans in 2026. So let's wrap this up. For maximum income, buy XEI. For maximum growth, buy VDY. For a balance of safety and income, XEI wins again. And remember, these ETFs are almost all banks and energy. So don't put your entire net worth into just one of them. Use it as a part of your portfolio next to a bigger worldwide ETF. That way you get the income and you're safe for the long run. By the way, some people even buy another ETF called XDIV because its fee is even lower at 0.11%. Now I want to know what you think. Which of these ETFs do you own? And after watching this, who do you think is the real winner for 2026? Let me know in the comments right now and check out these recommended videos YouTube thinks you'll like.